I'm at the WWD Apparel and Retail CEO Summit in New York City. I am joined by Manny Chirico. He is the CEO of PVH. Thanks for being here with us today, Manny.
My pleasure. Thank you.
So you had some interesting things to say in the room, talking about the idea of balancing stakeholders versus just shareholders. But you also said you don't totally agree with Senator Elizabeth Warren's plan about accountable capitalism. Can you explain some of the things you're trying to balance with the stakeholders versus shareholders argument in your own head?
Sure. I think it's a really thorny question when you think about it. Is obviously our shareholders are the owners of the corporation, and we're trying to run that for the corporation for their benefit. But at the same time, you need to take into consideration all your stakeholders that are out there: your employees, your customers, your suppliers, and the communities where you operate. And I think just having a shareholder focus doesn't give you a balanced view of the impact that you're having. And I think society is looking for corporations to play a greater role in the overall good of society. So we're trying to bring that balance where we continue to deliver for our shareholders. And I think the key is to really focus on long-term value creation rather than quarterly earnings and meeting expectations or beating expectations constantly. Bringing that balance, I think, is critical.
How do you do that, though, exactly, when you said, look, my CEO compensation is tied to a share price, and so if I make the shareholders happy, that sort of is my incentive. So how do you balance that?
Look, I think the reality is we're on a journey, not just PVH, but industry and corporations at large. And we're trying to balance all those constituencies, and we're trying to bring some real focus to our long-term view. Now, I think, I've been the CEO of PVH for just about 15 years, and I've always considered my customers, my employees, and the communities where we operate in my decision process. But I think it just brings it to another level to recognize that, I've got to really consider, I'm going to make a business decision. It may be good for the shareholders from a financial perspective, but I've got to think about how is this going to impact my employees? Is this decision potentially going to take a portion of the workforce and potentially could lose their jobs or impact their jobs going forward? I think those all have to be part of the equation as you go forward.
But isn't that what Elizabeth Warren is asking for as well?
I think methodology is important, and how we get there is important. I think what Elizabeth Warren's, I want to make sure I say it right, Capitalism Act really is focused on is also a methodology. She's advocating for the federal government to be directly involved and mandate what the purpose of a corporation would be. I think that's a mistake. I think corporations need to define their unique purpose. I think they need to define who the stakeholders are that matter to them to deliver that purpose. It's not the for every company. And I think she's trying to have some kind of a cookie cutter approach to it. I think that's what she's done. Also, I think arguably, and I think it's a strong argument, that here in the United States, we have the most efficient, best operating companies in the world. I don't think you want to mess around with that and put the federal government and the federal government agency, an agency of the federal government with all that bureaucracy in the middle of how a corporation is run between management, its shareholders, and its other stakeholders. So I think it's critical that we allow capitalism to adjust and change, and we allow the corporations to really move that forward. And I think you're seeing it more and more. I think the Business Roundtable coming out with their change of purpose, I think, was a catalyst to move that forward. And I think we're all thinking about it as we're going forward and trying to take it all into consideration.
Business and politics have become more and more intertwined over the years. You talked about it here at this summit. What's your position with what's going on between China and Hong Kong? There have been some thorny issues there with retail to make sure that you are pleasing all the stakeholders.
Well, first of all, trying to please all the stakeholders in that situation is an impossibility. I think it's just think about the range. I think that the challenge of that situation in itself just there is whatever your position is on different views is you have a group that's protesting, and that leadership of that group, it's not clear who's really speaking for that group. And I think in some ways it's not totally clear what that group wants. And if you wanted to get the two groups together, I don't know how you bring the groups together, because the groups that are protesting don't seem to have a cohesive leadership as they move forward. So it's just a very challenging situation. It doesn't mean that the issues they're raising aren't valid and there's real concerns there, but it's a thorny issue. It's impacting our business directly. We're seeing sales down 30 to 40% in the last 5 or 6 months where these protests have begun, in an area of the world where business has been, very strong for us there and in China, and that's really slowed down, not just a result of the protests, but the trade negotiations that have gone on, some of the, some bad blood that's come out with American companies and American brands. In some ways, I'm more concerned about that than I am tariffs, because I think that will get resolved over time, but I'm more concerned about, if you think about it, is that consumer in that part of the world loves Western brands, loves American brands, and I think what we've tainted that over the last 12 months, with some of the rhetoric around trade, some of the rhetoric around America first. Doesn't mean there's not issues that need to be resolved, but I just think sometimes those negotiations are better handled behind the scenes than in front of the cameras.
And so has your business improved at all, as it seems like the talks are moving forward to at least a de-escalation, if maybe not a resolution?
No, I think what's happened is the business has leveled off in China directly. We're starting to cycle some of the impact that we faced last year at this time, where it really started more in the fourth quarter of last year, so we're starting to cycle that now. So business is leveling off, but we haven't seen a resurgence in the business. And for 8 years, China for us has been nothing but a bit of a rocket ship from a growth point of view, growing, for the apparel industry and where we are, growing high single digits with our healthiest operating margins.
You had said on the last earnings call that you're not optimistic about the holiday season. You didn't really sound like you thought things could pick up between then and the end of the year. Is that still the same thinking, even though we've moved forward in some of these trade talks?
I think I said it just slightly different. I think I said we're planning and giving guidance with the assumption that the business trends would continue. I think the question is, there's a fundamental question of how do you see this progressing? We're being cautious, how we're buying inventory, how we're planning the business for the balance of the year, because what we're seeing in front of us is a continuation of the kind of trends we saw in the macro environment through the second quarter into the third quarter. So I think we're really operating well, particularly in Europe, where our business is very strong. But here in the States and in Asia, business continues to be under pressure.
And why do you think you're performing well in Europe when there has been talk about an economic slowdown in Europe in areas like Germany, and certainly Brexit continues to drag on in the UK?
Look, there is uncertainty in every part of the world. We're really dealing with it in Asia, we're dealing with it in the UK and Europe. And here in the United States with what's gone on, impeachment and everything else, and trade. But I would say the strength of the business in Europe, I think we're a bit counter-cyclical compared to everyone else. I think our brand strength, both with the Tommy Hilfiger brand that just continues to grow in Europe, high single digits, and the Calvin Klein brand that's growing double digits, really filling in white space, the opportunity for that brand, that's what's giving us the confidence in that market. Not so much that the general environment is so healthy, just that we're seeing really good trends with our two businesses.
And when it comes to Calvin Klein, what is it? You've moved from some fashion into more basics. Does that sort of help fulfilling this 90s nostalgia trend that's going on with some of the younger generations?
I guess I would just say it a little different. There's
Sure.
been a change in the leadership from a creative direction within the company. I think what we've tried to do is get truer and more true to the DNA of the brand. Calvin Klein is a modern aesthetic, not a contemporary brand, but a modern brand. It's a brand that I describe as black, gray, tan versus Tommy Hilfiger, which is red, white, and blue. And I think we've kind of strayed 18 to 24 months ago away from that and we're bringing it back to its core basics, and we're getting tremendous response with that movement as we go forward, particularly as we look out to 2020 with our order books and how retailers have been receiving the new line and the new creative direction.
You mentioned leadership a little bit. Stefan Larsson has come on to your team. Can you tell us a little bit about how his role is shaping up, and is he indeed the successor to you when you decide 15 years, 20 years, 25 years is too much?
Yeah, well, look, he is the successor. I think that's pretty clear. He's joined us. He's now been with the company about 4 to 5 months. He's really embracing the company, learning more about it, and having a significant impact on the strategy of the business, the strategy of our brands, and our positioning. And I think, listen, this will be my 15th year as CEO. I'm 62 years old. There comes a time, and I think we have a terrific management succession plan put in place. I've signed a 5-year contract with the board, and sometime within that 5-year period, the plan is that I'll transition from CEO, move to chairman for a period, and Stefan will step in as CEO, and we want to make it seamless to our management teams and seamless to our investor community and the management of our business. And I think he's an unbelievable talent, and we were very fortunate to be able to bring him in.
Just a couple quick ones before you let you go. We talked a little bit about the international businesses, but how about the tourism from international tourists here and the shoppers? Are you seeing any changes there?
We're starting to cycle it. Look, we went, just to take a step back, 2017, 2018, phenomenal years for us, particularly here in the States. And I think a good portion of that was international tourism and the strength of international tourism on our businesses. Our two big brands, Calvin Klein and Tommy Hilfiger, are global brands with a global presence. When consumers come here and see the presence of the brand, international tourists, we do a tremendous amount of business off that consumer base. We're seeing that consumer base in the channels where we operate down 30 to 35%. So in some of our main locations like Miami, Las Vegas, New York, where international tourism really drives our business, it has a dramatic impact on our business going forward. And I think it's two combinations. It's the strengthening dollar, which just makes travel to the United States more expensive. And we have to be honest, some of the rhetoric around trade and America first, it just doesn't feel as, I think, to tourists, they have choices about where to go and spend their money. And I think some of those choices are not coming here. I think that's an impact on the Chinese consumer. We're clearly seeing it south of the border, Brazil, Argentina, Mexico, less tourism coming into the country. And I think a number of players have talked about it, from Tiffany's to Macys to ourselves, and some of those real premium brands that are global are really feeling it here in the States.
And that's exactly where I was going to kind of end. As you mentioned, a key partner, Macys, department stores, there have been some observed trends that they are sluggish going in here to the back half of the year. Tourism has been a big issue for Macys as well. They pointed out a number of times. How do you feel about the department store space right now?
I think there's a retail dynamic that's going on in the States, and you can't argue there's too many stores in the United States, and the consumer has numerous options as they go forward. I feel strongly that Macys in the United States is our largest customer, a key partner for us as we go forward. And Jeff Gannett and his team are making major investments as they work their way through some of the challenging issues, the issues that they deal with driving traffic to the stores. I think you have to take into consideration that they're coming off of two really strong years in 2017 and 18. And I think the comp store cycle, trying to cycle that strong business, has really been a pressure on them. And I think we all got caught coming out of the fourth quarter. For us, our comps in the fourth quarter last year were up 5%. We were planning the business to continue a trend, even if we were being more conservative, up 1% to 2%. We didn't expect traffic trends to fall off the way they did, starting in the first quarter and then continue through the second quarter and beyond. So I think we all got caught with more inventory, put pressure on margins, and I think that exacerbated the problem. I feel going into holiday, the inventory situation has been cleaned up. Goods are in much better shape at retail, and I'm a little bit more hopeful about the holiday season as we go in, as we set up for November and December. that we could actually have a healthier environment than what we're planning for, than what we've planned for in particular right now.
Oh, that's good, because I was going to say, you did say I am not optimistic about the holiday season.
But I think one of the keys, I think the traffic and sales trends will continue to be under pressure, but I think the inventory situation is much more positive, and I think by that, I think it'll be really trying to manage markdowns and promotions to a level. It'll be a promotional season, but hopefully not as promotional as last year and not as promotional as some of us have planned.
I think promotions go hand in hand with holiday, unfortunately, for the U.S. consumer. Well, Manny Chirico, CEO of PVH, thank you so much for joining us here today.
It's a pleasure. Thank you.
Appreciate it. Thank you.